Welcome to Fear and Greed, the week ahead. I'm Jennifer Duke, and I'm joined by economist Stephen Koukoulas. You'll find him at thekouk.com, that's THEKOUK.com, and on X using the handle thekouk. Stephen, good morning.
Good morning, Jen.
So firstly, last week was a huge one. Can you talk us through what happened? I think we kicked off with the RBA meeting.
The RBA meeting, for the third month in a row, they held rates steady, the official cash rate at 4.1%. And it's not necessarily what they did that caused the great deal of interest, it's what they were sort of describing about the economy. And it was, I won't say it's dovish because they've still got a bias to tighten. They still said that, effectively, if there is a move in interest rates in the months ahead, it'll be up, not down. But having said that, I think the general consensus and interpretation of their comments is that we are in the early stages of what will probably be an extended period with rates on hold. And by an extended period, I think we could probably look well into the middle of next year and still be talking about a 4.1% cash rate. Now, the reasons are all very important, of course, and it is because inflation is decelerating. It's been confirmed in the recent numbers that we chatted about a week or so back, that inflation's continuing to decline. So that's good. And they also noted that there's still the full effects of the 400 basis points of rate hikes that they've delivered between May last year and June this year to fully impact on the economy. And they're even detecting that, and acknowledging, I should say, that the wage concerns that they might have had about a wage price spiral simply weren't coming to fruition. That, the wage numbers that we've seen are decent, but not at that level that causes a concern about higher inflation.
And we also had GDP growth, and the outgoing governor, Phil Lowe, gave a speech. What are they sort of telling us about the future of the economy?
Yeah, the GDP numbers were, it's one of these funny ones. It's something for everybody. The headline figure at 0.4% GDP growth isn't bad when the economy had to slow to get this inflation rate down. And the annual figure, 2.1% in the year through to June, was, again, not bad considering that we've had a slowing economy. However, scratch the surface, and that's where I think a lot of the concerns were starting to come through. In per capita terms, GDP has gone backwards in the last two quarters. So this per capita recession some people may have been reading about in the media is certainly there, because one of the only reasons why we had the economy expanding at all is because of population growth, high immigration, foreign students coming back to Australia, and they're good things, but it masks what's probably an underlying weakness in the economy. So that was something of a concern. We know that the household saving ratio fell to its lowest level in almost 15 years. So that savings buffer that the Reserve Bank had been talking about in the aftermath of the pandemic, that we saved money rather than spend it because we're all locked up at home, that's now being sort of eroded. So the savings buffer is a little bit less. And of course, that's higher interest rates and cost of living pressures that are feeding into that. So all up in summary, I guess it was showing a slower economy, as it should, but it was probably a little bit weaker than the headline figure would suggest. And as you mentioned, Dr. Lowe, his farewell speech to society, he sort of defended a lot of what he said. He acknowledged a lot of his errors and took a bit of a swipe at the media and vitriol against him. And in a sense, it didn't really say terribly much about his tenure as governor. And I think we'll see a lot more about, how well did Dr. Lowe do when he actually pulls up stumps in the next week or two.
So over the next week, what do we have coming up? I think there might be some labour force data coming out.
Labour force, yes, that's it. That's the big one. And as we know, the unemployment numbers are the critical ones for the health of the economy and indeed the RBA. So you might recall last month we had that little bit of a dip in employment. It fell 14,000 and the unemployment rate went from 3.5% to 3.7%. The monthly numbers are incredibly volatile. They do bounce around. They're just a survey from the Bureau of Statistics. So it can be a bit hazardous trying to forecast a month-on-month change in employment and the unemployment rate. However, we do know that with those slower economic numbers that we were just talking about for the GDP release, that we're probably in the early stages of a trend upturn in the unemployment rate. That it's probably easy to forecast where unemployment will be in the middle of next year than it will be later this week, because it will be higher. Whether it's a smooth path there, it's a bit of a sawtooth pattern getting up there, I'm not sure. But if there's any further signs of weakness, so maybe just a very tepid increase in employment, the unemployment rate ticks up to 3.8%, then that'll just reinforce the market pricing of steady interest rates. And linked to that, we've got the consumer sentiment numbers. we consumers are still gloomy. We're still pretty miserable.
Yeah.
The rate hikes, cost of living are the critical factors impacting on cost of living. And the NAB Business Survey, I love that survey. It's a good indicator of how the business sector's feeling. And the business sector's been a lot more resilient in the last 12 months, to be honest. And they have been showing that some of these price pressures have been easing. So we'll be sort of trawling through and over the NAB Business Survey to see whether there's sort of a bit more resilience in the business side of the economy and whether these price pressures, selling prices, labour costs in the survey are continuing to track back lower.
And I look forward to breaking that down with you again next week. Hopefully you have a good one ahead.
It'll be a good week. Always fun to see the labour force numbers. And I'm just, by the way, I think after last week and Collingwood's win, consumer sentiment might get a little bit of an uptick because the mighty Magpies won last week.
I think that's going to be a divisive call for the week. So there you go. Thanks so much, Stephen. And that was economist Stephen Koukoulas, better known as The Kook. You can find him at thekook.com and follow him on X using the handle The Kook. I'm Jennifer Duke, economics correspondent at Capital Brief and filling in for Sean Elmer. And this is Fear and Greed, the week ahead.